At 20 to 8, the Australian government has recently intervened in the home loan process, asking major banks to reconsider how university debts impact home loan approvals. With more graduates struggling to buy their first home due to that huge student debt, financial regulators are updating their guidelines to make it easier for these Australians to access home finance. Although how it'll all be rolled out is yet to be seen. Anja Pannek is the Chief Executive of the Mortgage and Finance Association of Australia. She joins us right now. Anja, good morning.
Good morning. Great to be with you this morning, Ron.
Yeah, thank you. Look, from a mortgage and finance perspective, how do you see these changes affecting first home buyers with their student loans?
So we see this proposal by the Treasurer, which we fully expect to be enacted in sort of coming months. We see this as a real positive. What our members tell us, and we've got something like 15,000 mortgage broker members across the country, is that HECS debt, if you're a young Australian and you've got a HECS debt, it's actually a barrier to home ownership because of the way that banks assess that debt. So everyone knows HECS debt, it's not like a car loan, it's not like a personal loan. Repayment of that debt's actually income contingent, and it's only paid when that person gets to a certain amount of taxable income. But the way that banks treat it at the moment is it actually has the effect of reducing the amount that a person can borrow because of the calculations that banks make. And I'll just bring that to life. So one of our members actually reported they had a client, they had an $8,000 HECS debt balance, and it reduced the amount that they could borrow by $120,000.
Yeah.
Now, that is a really significant amount. So what we've been calling for quite some time is the way that HECS debt is being treated needs to be revisited. So we see this as a really positive move for potential home buyers across the country.
Well, you mentioned an $8,000 debt. I'm aware of young people with debts as high as $50,000. It just sits there hanging over their head. It doesn't go away. It's almost impossible to get rid of, even with indexation. Are these regulatory changes enough to address the challenges of young people, graduates trying to get into their first homes?
Ron, look, I think it's a really positive first step. We've got to take our view, and what our members tell us as well, is we've got to take a multi-pronged approach for increasing home ownership in this country. It is a big challenge, and we see this as a big barrier. So I think this is a good first step. We've obviously still got to go through, APRA and ASIC, which are the regulatory bodies that oversee the banks. They've got to go through a period of getting feedback and implementing these changes. But I think getting there is really going to open the door for many of these people who have been sitting there. And I think, many people with HECS debt would be sort of going, I can't even look at getting a home loan because I know I've got this debt. Or they've gone and seen their mortgage broker, and their mortgage broker said, well, you've got to pay off your debt, and that eats into their deposit saving as well. So I think it's a very sensible approach, and one of a multitude of steps I think we all need to, if it's banks, regulators, government, to face into and to really address the home ownership challenge we've got across the country.
Anja, how have the major banks and financial institutions responded to the push for change?
There were quite a few. So there was a recent home ownership inquiry that looked at the regulatory framework across Australia, and banks participated, and they actually called this out as well, as well as a number of academics just calling out this, the sort of inequity and mismatch because HECS isn't like normal debt.
No.
So I think you'll see that it is something that is taken on and responded to well by banks themselves. Once they get that guidance from APRA, because obviously having good guidance from the regulator is important, and it really goes to lending in Australia is rigorous. This is something that I think we need to address, and it will make it better for homeowners.
Well, let's hope so, because it's very tough for young people at the moment, and with these HECS debts, boy, do they just sit there and never go away. Anja, thank you so much. I appreciate it.
Yes, absolutely. Thanks for your time, Ron.
Lovely. Anja Pannek there. She's the Chief Executive of the Mortgage and Finance Association of Australia.